Okay. Okay, see you, bye. Okay, bye. Right, good afternoon, guys. Can you hear me? Can I just ask anybody just to answer there?
Can you?
Yes, we can hear
You clearly now.
Right, Claudine, I cannot upload, please. Okay, we're just waiting on Claudine just to change my status here, guys, so that I can upload the stuff. Guys, I'm just waiting on Claudine just to sort out some of the permissions here, and then we can get going.
Just give me 1 second. Sivu is busy with it. I don't know why it's taking so. Why it's taking so long now? It shouldn't. Sir?
Yes.
Are we going to mark the homework you gave us last week?
Yes, okay.
Or
We
just
are
go
going
through?
to take a look at the homework, but also I have posted the solution I think, is this Bianca speaking?
Yes. Hi, sir.
Okay. Bianca, just go for me to, if you go to your notes, under session number 1, I have
Oh,
uploaded
yes.
the solution there.
Oh, thank you so much, sir.
Okay. Right, guys, I think while we are waiting on just the presenter, that must just be changed there. Let us just have a discussion quickly on last week's class, and let us take it from there. In last week's class, we have discussed the partnerships, the financial statements then of partnerships, and we had a discussion on the financial statements, the statement of profit and loss and other comprehensive income, statement of changes in equity, and statement of financial position. Your homework activity was the statement of comprehensive, the statement of changes in equity. I'd given you a question on the statement of changes in equity. I have posted the solution to that under, if you go to session number 1, you will see the solution there. And also today's session, which is session number 2, the solution of session number 2 will be posted under session 2's notes, but I will only post that later, say by tomorrow or by Monday, I will post that. The biggest problem that many students had with the homework activity came in with the balances of the capital accounts. Note that in the first set of information, they tell you that one of the partners has increased his capital during the course of the year by contributing a further amount. So the calculations then pose the biggest problem there to many students. And to calculate those amounts, then you then had to take a look at what was the capital at the beginning of the year, and then there was an increase during the course of the year. So for the interest on capital calculation, the amount of 100,000 Rand was not there for the entire year. And that is why you had to work it out for the first 6 months, the interest on that amount, and then the interest on the next 6 months. And that was the biggest problem that the students had there with that session. Just go back to that solution, take a look at your answer, and then you see whether you are on the ball there as far as that is concerned. I want to start today's session, but Claudine, I haven't got any permissions as yet.
Two seconds.
Okay. Right, students, I think while we wait on that.
Okay, sorry, Wilfred, you're ready
fine.
to go. Sorry about
Yes.
that. Sorry.
Okay, thank you.
Okay.
I've got it now. Okay. Right, students, good afternoon. Let us get going, please. I have explained to you earlier about the calculation there. If you go to your solution now of lecture number 1, the one on Alex Traders, that is the one that we worked out last week in last week's session. And then at the bottom is the solution of your homework, as I indicated to you. In your list of accounts, they give you the balances of the two capital accounts as 100,000 Rand each, but that is the balance at the end of the year. During the course of the year, there was a capital contribution, a further contribution of 40,000 Rand for partner P, which means that the opening balance was 60,000. So that is something that you must just take into consideration there. And as I pointed out, many students made a mistake there. So if you are going to calculate the interest on capital, the 9,600 Rand posed a problem to many students. And that 9,600 is then the 60,000 Rand, the amount of 60,000 Rand was only there for a 6-month period, and the 40,000 Rand is a further contribution for the last 6 months. And if you do the calculation there at 12% per annum, you will get that 9,600 Rand as interest on capital. Another big problem that the students had here was to calculate the partner share of the total profit. Remember, the profit as per statement of profit and loss and other comprehensive income was an amount of 361,592. You must take into account the salaries to the partners that will decrease the available profit, interest on capital that will decrease the profit, interest on current account that will decrease the profit, and after that, the available profit of 208,520 Rand. That is then shared equally amongst the partners. Bring into account the drawings, and then you will have that then, and you will then see that the solution then of last week's class. Right, we move into today's class. Or are there any further questions on the homework?
Yes, sir. Sorry. My question is, if you didn't check, for instance, I saw that that FUSA did give an extra 40,000, but at the balances at the beginning of the year, I gave the 100,000, and then I added the 40,000 with. So if I made those calculations wrong in exam, if because of that some of my other calculations were wrong, but they still check that out and mark with the mistake, or would I still lose the marks there?
No, they will work with your mistake. So in essence, if you've done that, you only would have lost 2 marks.
Okay.
Okay.
Thank you so much, sir. Yes,
okay.
thank
Any
you.
Other questions? Right, let us turn our attentions to today's work then, guys, and we are on to the lecture notes now. That is indicated lecture notes then for lecture number 2. So just a reminder on what we have covered last week, the financial statements of a partnership. There are 3 financial statements, and for exam purposes, you must be able to do all 3 financial statements. Just a reminder about the partnership agreement, preferably in writing, and all the other information will be contained in your partnership agreement as to how the profits must be shared. Just a reminder that if salaries are paid during the course of the year, we call that drawings. And the only time you work with salaries is at the end of the financial year when you transfer your salaries that the partners are entitled to, you transfer that to your current accounts. Profit sharing ratio. Profit sharing ratio is normally given to you in your question, whether it is equal or in a ratio of 2:1, it will be given to you. However, if no ratio is given, then the profits are then shared in the ratio of the capital contributions. Current accounts of the partners, as you guys may know, it may have a debit or a credit balance, and everything that the partner is entitled to for the financial year, according to the partnership agreement, we transfer to his current account, and then you close off the drawings then at the end of the year to the current account. Those are just some of the important things that you need to know when we are dealing with financial statements of a partnership. On the following page, I've got a question for you, which deals with it is the October-November 2018 exam. It's a business called DG Traders, where we've got Dolce and Gabbana as our two partners. Go to your required. And if you go to your required on the question tells you that you must prepare a statement of profit or loss and other comprehensive income for 19 marks. And then they also ask you to complete a statement of changes in equity. Okay, so we are going to use this lecture, guys, to work through this question and see how we are going to finish this question. Also, just a reminder that you need to complete the attendance register, and then also at the end of the session, we will appreciate it if you can give us also feedback on this. Also note that even lecture number 1 is already uploaded, so you can access that, and I've seen that some of you people has indicated there in the chat already where to get hold of the video for lecture number 1. And remember, all the lectures will be recorded, but please allow us just 2 to 3 days to upload and to do the final editing. So this lecture you will perhaps be able to access then only perhaps on Tuesday. And then also, I also post the notes before the time so that you can download the notes and print it out. It will just make life so much easier if you've got the notes printed in front of you, and then you can see immediately what I'm referring to you or what I'm referring to in the presentation. And also you can also then attempt the question before the time. So when we do the actual presentation, you can then ask relevant questions pertaining to that particular question. Right, so we are taking a look at this question. And the information supplied to us is the following. They gave us a trial balance or a list of accounts, and they give us now the additional information. So I'm going to take the additional information now, and I am going to complete now, take the adjustments, the additional information, and I'm going to update the trial balance now with new amounts. And those new amounts we are going to use now when we are going to do the financial statements. In this question, you must do the statement of profit and loss and other comprehensive income and the statement of changes in equity. Okay. The attendance register, somebody is asking is where do you get the attendance register? Just go onto your icon there, and there will be an icon for quick links, and then under quick links you can also get it there, or somebody, I can perhaps ask Claudine just to post the link there for you, and then you'll be able to see it there. Okay, right, it has been posted there now, so you'll be able to see and complete then the attendance register. I am back into the notes, and I am into the notes that speaks about the worksheet for lecture 2. So the information given to us there is a list of accounts. I'm going to take all the adjustments now into account, and I'm going to update those list of accounts now. Additional information number 1. Additional information number 1 speaks about the fact that the inventory balance on the 31st of December is 76,250. And of course, as you guys may know, that is our closing balance. So our stock, we will have closing balance at the end of the year, given to us in number 1, 76,250. I'm into additional information number 2. Additional information number 2. An amount of 550 Rand owed by a debtor must be written off as irrecoverable. Okay. The accounts affected there would be your trade receivables and your account credit losses. We are writing off the account there of a debtor, and we are going to work with our credit losses account. So go to your credit losses now. In your list of accounts, we don't have an account called credit losses. So we are just going to add a further expense here. So we will have an expense now called credit losses. And our credit losses, we will have to increase our credit losses there with the amount of 550 Rand. And your trade receivables control, you will have to minus that by 550 because the adjustment will impact on your trade receivables and your credit losses. Okay. The third adjustment, adjustment number 3, it tells you that we have got the allowance for credit losses must be adjusted upwards by a further 1,500. If you go to your list of accounts, you will see allowance for credit losses is currently 2,500 Rand. It must be adjusted upwards, so you will add another 1,500 Rand to your allowance for credit losses. The 2 accounts affected when you work with allowance for credit losses is allowance for credit losses and other account affected will be credit losses. So the 2 accounts affected would be allowance for credit losses as well as credit losses. So your allowance will have to increase by 1,500 and your credit losses, your expense for credit losses will have to increase by a further 1,500. Okay. All okay so far? We've only done the first 3 adjustments. The method that we follow here is that I'm going to work through all of these adjustments, make the adjustments, show the impact on the list of the accounts, then we will work with the new amounts into the list of accounts, and those amounts, after the adjustments has been taken into account, those amounts we're going to use when we are going to do the financial statements. Any questions up to this stage?
So good afternoon. I do see that Sergio Frost has his hand up, so maybe there's a question there.
A hand up? I don't see any hand up. Maybe the hand up say it's fine.
It was a slip of the hand. I think I see he just put it down again. Sorry about that.
Okay. Okay. Thank you, Charles. All good. Right. Right. Let us continue. I'm back into my worksheet. I am busy with adjustment number 4. Adjustment number 4 tells me that on the 1st of May, additional furniture with a cost price of 12,500 was purchased. Furthermore, number 5 tells me that depreciation must be provided for at 12% per annum on the furniture and equipment according to the diminishing balance method. So number 4 and number 5, we are going to work together on that one.
Sir?
So 4 and 5 works together. Number 4, they tell you that on the 1st of May, additional furniture was purchased. So go to your furniture account. I'll give you an opportunity now after I've explained all of this. The furniture account, the furniture at cost is given to you as 43,750. But that is the value of furniture and equipment on the 31st of December 2017, which is at the end of the financial year. The information under number 4 tells you that on the 1st of May, additional furniture was purchased. So you need to understand the following. You need to understand that our furniture consists of old furniture and new furniture. So our new furniture was purchased on the 1st of May, and it was purchased for 12,500 Rand. Then we have also got old furniture. And the old furniture is the furniture that we had at the beginning of the financial year. And our old furniture would be the amount of 43,750 minus the 12,500 Rand of our new furniture. So the value of our old furniture is therefore actually 31,250. So you need to understand that the amount in the trial balance or in your list of accounts of furniture and equipment of 43,750 consists of two amounts. It consists of new items of 12,500 and old furniture of 31,250. So if I am going to calculate my depreciation expense for the year, I will say on the new furniture, it will be 12,500, and the rate of depreciation that we are going to apply will be the 12% per annum. But we only had this furniture for a period of 8 months, from the 1st of May. So you count May, June, July, August, September, October, November, December. So it is for a period of 8 months, and the depreciation will then be 12,500 at 12% per annum for a period of 8 months. And that will give you an amount of 1,000 Rand. The old furniture must be depreciated on the diminishing balance method. Diminishing balance method means first calculate the carrying value. So what is the carrying value? The carrying value is the cost price, and the cost price is 31,250 minus the accumulated depreciation, and your accumulated depreciation is the amount of 4,375. So we will have 31,250 minus the 4,350 will give you a cost price, a carrying value of 26,875. We'll take that and you multiply that now by 12%. And that will give you depreciation on your old furniture of 3,225. So your total amount of depreciation will then be total depreciation expense is therefore the amount of 4,225. And if we take that back to our list of accounts that we've got there now, we've got a new expense called depreciation. Our depreciation expense for the year is then 4,225. The other account will be accumulated depreciation, and your accumulated depreciation will increase by 4,225. So to record that transaction, you will then say debit your depreciation expense and you credit your accumulated depreciation. The total expense for the financial year is the amount of 4,225, and it consists of 1,000 rands depreciation on the new stuff and 3,225 rand depreciation on the old existing furniture and equipment. Any questions on that calculation? Okay, it looks as if everything is in order with that one. Not a problem at all. Right, I continue. Back into your notes. I am on adjustment number 6 now. Okay. Gabbana granted a loan on the 1st of June 2016. Now, the 1st of June 2016 is in the previous financial year already, right? Interest on the loan is calculated at 5% per annum. The loan is unsecured and is payable in full on the 30th of June 2019. And interest on the current account for the year must still be accounted for. Interest for the current financial year, we must still account for that. Now go to the loan account and you will see that there is a loan of 50,000 rand. The loan there is 50,000 rand. Okay. Interest for the current financial year must still be accounted for. And if you take a look at your loan now, and we are now going to calculate the interest on the loan, then we say the interest on the loan must be calculated at, on the 50,000 rand at 5% per annum. And that will give you an amount of 2,500 rand. So that is the expense that you are supposed to pay for the year. You are supposed to pay 2,500 rand. However, if you go to your list of accounts, you will see that there is an expense called interest. And that is the interest on the long-term loan, 2,250. That means that we have paid already, 2,250 has been paid already. Your calculation now shows that you must pay 2,500 for the year, which means that there is still another 250 rand outstanding. To account for that, we will increase the interest on loan by 250 rand, and you are going to work with a new account called accrued expenses. And your accrued expenses, which is a liability, is the amount then of 250 Rand. Okay, all clear on that one? Just a very simple FAC1502 calculation there. The interest on loan, you're supposed to pay 2,500 for the year. You have paid only 2,250 to date. You are still owing another 250 Rand, and that 250 Rand is classified then as accrued expenses. We continue. The next adjustment is under number 7. And number 7, the adjustment number 7 deals with the conditions of the partnership agreement. We're not going to take that now into account now. Everything to do with the partnership agreement, remember, we are going to account for that in the statement of changes in equity. So when we are going to do the statement of changes in equity, then we are going to deal with those things there under number 7. Sorry. Number 8, adjustment number 8. Adjustment number 8, it tells you there that from the 1st of July, Gabbana rendered specialized services to the partnership at a salary of 2,000 Rand per month. The salary due to him is yet to be paid at the end of the year. So now we are talking about salaries to the partners. And salaries to the partners, we are going to account for that in the statement of changes in equity. Okay, we are not going to take it into account when we are dealing with the statement of profit and loss and other comprehensive income. Number 8, salaries to partners, that also goes to the statement of changes in equity.
Sorry, sir, can I ask a question?
Yes, I'm listening.
Thank you so much. Last week you told us if a partner takes his salary during the year, obviously we call it drawings. But I saw with the exercise you gave us last week, I didn't quite understand what now actually will be classified as a salary and what will be classified as a drawing.
Okay. Right. Let me just clarify that. If the partnership agreement stipulates that the partner must get a salary, we call that salaries. But we only transfer that salary at the end of the financial year to his current account. If, however, the salary is paid out to him, if he received the money, then we don't call it salaries. Then it is called drawings and recorded as drawings. So if a partner gets paid out the salary during the course of the year, you credit the bank account and you debit drawings. I hope that clears it up. That
yes,
is
thank you.
If he receives the money, then you call it drawings. But now in this exercise, okay, yes, what do you want to say?
No, I saw someone else put his hand up, the Sergio guy.
Yeah.
Hello.
Okay.
So,
yes.
Can I just ask a question quickly with regard to the anchor statement?
You can go ahead, Sergio.
I just wanted to find out. So if there was salaries recorded in the trial balance and there was an adjustment saying that a partner was paid 2,000 Rand per month for the financial year, would that mean that drawings at the end of the drawings, that the amount that you would have been paid as a salary would go as drawings in the statement of changes in equity? That's what I'm trying to ascertain.
Okay. Okay. Guys, I can see the confusion. Let me just quickly give you an example. I'm going to give you an example and then we're going to take it from there. Okay. I am going to give you now on the worksheet that we are busy with now. I'm just going to add something in here so that I can make myself clear here. Okay. If I give you a trial balance on the 31st of December 2019, and in this trial balance, table here. And in the trial balance, I have got a debit here and I've got a credit here. I've got a column here for debit and I've got a column here for credit. And I have got salaries here. And I have got drawings of partner A and I have got drawings of partner B, and say now the salaries for the year is 340,000 Rand and the drawings is 90,000 and the drawings for partner B is 80,000 Rand. Okay, now I'm going to give you some additional information. And under my additional information, I will tell you the following. Number one, the accountant erroneously, so he made an error. He put the salaries paid to the partners he recorded that under the expense salaries. And now we say it is 5,000 Rand per month to each partner. So, during the course of the year, if you see in your trial balance there is drawings already, that refers to the fact that they took items during the course of the year. Right. According to our information here, salaries was paid 340,000 Rand for the year. But the accountant made a mistake. He put in the salaries that was paid out to the partners. He included it here with the salaries. And it is wrong to do it like that. Therefore, in order to do the adjustment now, we will say that your salaries expense will have to decrease by 120,000 Rand because salaries should not be there. Salaries must be regarded as drawings. So if the salaries was paid out during the course of the year, your drawings must increase by 60,000 Rand and B's drawings must also increase by 60,000 Rand. Your salaries will decrease. So when you do your statement of changes in equity, you transfer to the current accounts, you will now transfer salaries of 60,000 Rand each. So if I can just give you that information now, if I ask you, do and show the statement of changes in equity. In your statement of changes in equity now, where you are going to have a column for the capital account of A, a capital account of B, and then you're also going to have, I'm just going to put it in here, you're going to have here current account of partner A, and you're going to have current account of partner B here, and you're going to have a column for appropriation. How are we going to deal with this now? Remember, this statement starts you off with the opening balances, and then we're going to have any changes to the capital, and then we're going to have the profit for the year. And then you must, in your appropriation account, indicate there what is the profit for the year. And now we transfer everything that the partner is entitled to his current account. According to the partnership agreement, these partners are entitled to salaries of 60,000 Rand each one. We transfer to the current accounts what they are entitled to. And at the end of the year, after you have now transferred in your interest on current account and interest on the capital, and the profit share is there, and now you will have drawings, and the drawings of the two partners in brackets is now 150,000, and also to the other partner it will be 140,000. Brackets there because it will decrease the current accounts of the partners. I hope that example will clarify it, but let me just summarize again. Okay. If a partner is paid out a salary during the course of the year, it is not called salaries, but we record it as drawings. The only time you work with salaries is at the end of the financial year, when you transfer to his current account what he is entitled to according to the partnership agreement. That is the only time you work with salaries. So if we pay it out to him during the course of the year, we don't call it salaries, we call it drawings. I hope that clarifies that then, Bianca and Sergio.
Thank you, sir, it does.
Okay, right.
Thank you, sir. Thank you.
Okay, we continue. Right, I'm still on the worksheet. I am still busy with my adjustments. And I am now going on to adjustment number 9. Adjustment number 9. So as far as number 8 is concerned, salaries to partners, we're going to show that in the statement of changes in equity. And note now that the salaries is only from the 1st of July, and it is at 2,000 Rand per month. So we are going to show that salaries that he is entitled to is entitled then to an amount of 12,000 Rand. Right, I am on to number 9, adjustment number 9. On the 31st of December, a credit sale of 20,000 Rand occurred. The terms of the sale stipulate that 10% settlement discount granted if the account is settled on the 31st of January. This transaction must still be recorded in the books of the partnership. Customers of Dolce & Gabbana, they usually settle their accounts within a period. Right, let us first of all see what are the accounts affected now with this transaction. First of all, we are selling items now to a customer on credit. Therefore, the accounts affected would be the sales account will be affected, as well as trade receivables. So sales will increase by 20,000 Rand and your trade receivables will increase by 20,000 Rand. So let us record that now in the books of the business. We update our trial balance now. Trade receivables must increase here by 20,000 Rand. And our revenue sales at the bottom here will have to increase by a further 20,000 rand. However, we will have to make provision then for the discount, and if we make provision for the discount, we will record that discount now. Let me just get back here. And the two accounts affected here will be settlement discount granted and the other account affected will be allowance for settlement discount granted. And this is an amount of 2,000 Rand, being the 10% on that. Okay, I will explain that now. So the account there will be settlement discount granted and allowance for settlement discount granted. Let me just update my trial balance quickly.
Which one is credited and which one is debited? Can you mention that?
Okay, I'll do that. Settlement discount granted is an expense to the business, will be debited, and we are going to work with an account called allowances for settlement discount granted, which is classified as a negative asset, an asset with a credit balance, and that account must be credited, and the amount is 2,000 Rand. Okay. So guys, let me just quickly explain that one to you now and see whether you understand this. Allowance for settlement discount granted works on the same basis as allowance for credit losses. Remember, with the allowance for credit losses, it's a provision. We make an allowance for that. And when you work with the allowance for credit losses, the two accounts involved will be credit losses and allowance for credit losses. Credit losses is an expense. Debit your expense, credit losses. Credit your account, allowance for credit losses. On the same basis, we also make a provision for settlement discount granted, because the transaction tells you that if this customer is paying before the 31st of January, we will give him a discount of 2,000 Rand, which is the 10%. Further, the adjustment tells you that customers of the partnership usually settle their accounts within a 30-day period. So we are going to make provision for that allowance for settlement discount granted. To record this in the books of the business, we debit our account settlement discount granted, because we've got a further expense called settlement discount granted, and we credit our account allowance for settlement discount granted. Any queries on that one?
Yes, sir. Will the settlement discount granted come off the sales figure?
Yes, because settlement discount granted is an expense. So do your statement of comprehensive income, and your statement of comprehensive income to get your revenue amount is sales minus it's your sales minus your sales returns minus settlement discount granted. So you have now created an account called settlement discount granted, which will decrease your revenue.
So, sir, it's decreasing on both sides. If you look at it like that, because your sales amount will be decreasing by the 2,000, and the allowance you created will also be decreasing your profits.
No, allowance for settlement discount granted is an asset. It's not an income account, nor an expense account. It's an asset. We call it.
It's not in the statement of profit and loss.
Correct. It's in your statement of financial position. Just give you that understanding. If you now had to do your statement of financial position under your current assets, remember there's 4 categories of current assets: inventory, trade and other receivables, prepaid expenses, and cash equivalents. So under the heading trade and other receivables will be trade receivables minus allowance for credit losses minus allowance for settlement discount granted plus accrued income. I just think that you guys haven't worked as yet with an account such as the allowance for settlement discount granted when we work with the financial statements of closed corporations, then I will highlight that again to you guys. All clear?
Thank you, sir.
All right. We continue. Right, I am now on to adjustment number 10. Adjustment number 10. The rental expense was set at a fixed amount of 200 Rand per month for the current financial year. Rental expense is 200 Rand per month. So you go to your list of your accounts and you will see that your rental expense is the amount of, in your list of accounts, rental expense is 2,500 Rand. But you must only pay 200 Rand per month. Therefore, you have paid 100 Rand too much. So you will have to decrease your rental expense by 100 Rand. You are going to work with a new account called prepaid expenses to the business, and your prepaid expenses will be the amount of 100 Rand. So as far as adjustment number 10 is concerned, we are dealing with rent expense being the one account that is involved, and the other account is then prepaid expenses, because we are only supposed to pay 2,400, but we've paid 2,500, which is 100 Rand too much. Adjustment number 11 is once again just telling you that the partners share profits and losses equally. So the information under adjustment number 11, we are going to use that to complete our statement of changes in equity. That information goes into the statement of changes in equity. So guys, that will take care of all my adjustments now. I have completed all my adjustments. I have completed, therefore, now all my adjustments that impact on my statement of profit and loss and other comprehensive income. I am now in a position to complete the statement of profit and loss and other comprehensive income. I think I'm going to give you an opportunity just for 5 minutes. Complete for me the statement of profit and loss and other comprehensive income and see how far you can get in with that activity.
Sorry, sir, can you just open up the adjustments that you did? Just share it on the screen.
Okay. Didn't
Thank
you
you,
take
sir.
it down? Okay.
I'm sorry, sir, I'm a bit blunt.
Do you want to see that part there?
Oh, yes, exactly that part. Thank you, sir.
Okay.
I'm sorry. I'm sorry.
Celeste, do you mind putting your adjustments back on share for us, please?
Okay, can you see it now?
Not yet.
Okay, I'll share it now.
Thank you.
Can you see it now?
There we go. Thank you.
Okay. Right, guys, I think everybody's okay now, or we just need to get going with that. So let us take a look at the solution then of the statement of profit and loss and other comprehensive income. If I'm now going to do the statement of profit and loss and other comprehensive income, my revenue, which is then the sales amount of 343,745 plus the 20,000 minus the 2,000, and that will give me revenue of 361,745. Your cost of sales is a calculation, of course. Your cost of sales, your opening inventory was the amount of 100,625. Your purchases, the net purchases, no adjustment, 250,620. Your closing inventory given to you in adjustment number 1 is an amount of 76,250. That will give you cost of sales then of, in brackets, 274,274,995. Your gross profit is then your revenue minus your cost of sales, which is the amount of 86,750. 86,750. You've got other income. Your next heading is other income. There's only one other income, and that was your credit losses recovered, which amounted to 130 Rand in your list of accounts. Your total amount of other income is now 130 Rand. Your column for distribution, administrative and other expenses consisted of the following. Your stationery expense, 750 Rand. Salaries and wages is the amount of 8,125. Your rental expense, remember the rental expense, there was an adjustment, you show it, it is 2,500 minus the 100 Rand from your prepaid expenses, giving you an expense of 2,400 Rand. Your credit losses will consist of the 550 Rand that we have written off in adjustment number 2. And in adjustment number 3, there was a further increase to your allowance of 1,500, giving you a total expense there of 2,050, 2,050. That was your expense for credit losses. Our depreciation expense, remember we worked out the depreciation expense in adjustments 4 and 5, and our depreciation expense was the amount of 4,225, giving you a total of distribution, administrative and other expenses, 750, plus the 8,125, plus the 2,400, plus the 2,050, plus the 4,225, giving you distribution, administrative and other expenses, 17,550. The finance cost consisted only on your interest on loan. Interest on loan, remember we paid 2,250, but there was an amount of accrued expenses of 250 Rand, resulting in interest on loan of 2,500. Finance cost, therefore, is the amount of 2,500 Rand. And if you want to calculate what is the profit for the year, it will then be the 86,750 of gross profit, plus your other income of 130 Rand, minus distribution, administrative and other expenses of 17,550, minus your finance cost of 2,500, and your profit for the year is an amount of 66,830. Your other comprehensive income is 0, and your total comprehensive income for the year is an amount of 66,830. 66,830. Any questions for me, guys, on the statement of profit or loss and other comprehensive income? Most students will only have problems with the adjustments. Okay, yes, Charles?
Thank you. Yes, I was just also the allowance for settlement discount granted is a bit new to me, so I just want to make sure in the case that you had actual settlement discount granted for the year as well as an allowance, you would have to subtract both from revenue, yes?
No. Allowance for settlement discount granted is an asset. And assets can't go to the statement of profit and loss and other comprehensive income. Assets go to the statement of financial position. Are we clear on that?
Okay, was it credit losses that you, sorry, it was credit losses that you subtracted?
No, it was settlement discount granted. Settlement discount granted is an expense. Allowance for settlement discount granted is an asset. Are we confused now?
Yes, I think so, because so this is around adjustment 9, correct? Where
adjustment number 9, yes.
But that settlement discount granted, it hasn't actually been granted, has it? Is it because it says if the owner settled before 31 January, is that not then an allowance? Does it already count as an actual settlement discount granted?
Right. Okay. With adjustment number 9, 2 things happen. First of all, you must record the fact that there was sales. So you record the sales, debit the trade receivables, and credit sales. The sales amount is 20,000 Rand. Now we must record the settlement discount granted. We debit the account settlement discount granted, which is an expense, appear in your statement of profit and loss and other comprehensive income, and you credit your account allowance for settlement discount granted. Allowance for settlement discount granted is an asset, and it will appear in your statement of financial position. So, if you must do your statement of profit or loss and other comprehensive income, sales has increased by 20,000 Rand. But if you show revenue is sales minus sales returns minus settlement discount granted. So what is sales now? Sales is the amount given plus 20,000 minus settlement discount granted, and settlement discount granted is 2,000 Rand. On the last day of the financial year, you had to record the extra sales, and you also record settlement discount granted. Does that clear it up, Charles, or still confused?
I think so. So in other words, it would be debit settlement discount granted, but credit allowance for in your ledger.
That is correct.
But then if it's an asset, an asset increase on the debit side, I'm just trying to see how it balances at the end of the day, because if it's an asset and it should increase on the debit side, shouldn't it?
That is correct. Okay.
Maybe that's
okay. Let me just quickly explain to you something.
But the entry is on the credit side,
right? In FAC1601 and also what we've done under FAC1502 is that there are 3 negative assets that you guys work with. The one negative asset, or what we call contra asset accounts, will be accumulated depreciation. Do you understand that accumulated depreciation is an asset? It's called a negative asset, an asset with a credit balance. It increases on the credit side, and in the statement of financial position, you will say cost minus accumulated depreciation. On the same basis, the second negative asset that you have dealt with before is called allowance for credit losses. Allowance for credit losses is classified as a negative asset, a contra asset account, an asset with a credit balance, And when you do the statement of financial position, to get your trade and other receivables, you will say trade and other receivables is equal to trade receivables minus allowance for credit losses. The third negative asset that you are working with now is allowance for settlement discount granted. Allowance for settlement discount granted is an asset with a credit balance. When you do the statement of financial position, you subtract that also from your trade receivables. So on the same basis as you will work with accumulated depreciation, allowance for credit losses, you will work with allowance for settlement discount granted. Does that clear it up, Charles?
Yes, thank you for spending the time on that. That's clear to me now. Thank you.
Okay. Any other questions on the statement of profit or loss and other comprehensive income?
Yes, sir.
Mr. Jones has got a question.
Would you just touch on additional information, point number 6? I see the rental expense on the balances that it's given us. The original trial balance is 2,500, and we have an accrued expense of 250. Would you just go over that one more time, please, sir? I think I missed
Mr.
the
Jones,
trick.
just please check for me that the rental expense is adjustment number 10 and interest on loan is number 6. So which one now?
Look. Interest on loan, my mistake. Interest
Okay,
on loan.
interest on loan is number 6, eh? Right.
Yes.
The loan from the partner is an amount of 50,000 Rand. We must pay interest at 5% per annum, and our interest is therefore 2,500 Rand. That is what we are supposed to pay. However, we have paid only 2,250. So we owe another 250.
Yeah, I confused those two. I understand my mistake. Sorry, sir.
All good?
Yes, sir.
Yeah, you see, Mr. Jones, what happened is this accounting is so easy you get confused. All right. Okay, any other thing? Anything else, guys? Right, if there's nothing else, let us move on to the second part of the question, where we must now do the statement of changes in equity. So in the statement of changes in equity, make provision for the two capital balances, the current account balances, and a column for appropriation. Remember, you can have an account here, a column here for asset replacement reserve as well. But in this question, there was no asset replacement reserve. There was also no increases or decreases to the capital. So we take the profit for the year as calculated in your statement of profit and loss and other comprehensive income. And your profit for the year is 66,830 as calculated in your statement of profit and loss and other comprehensive income. Now you take into account all the adjustments that will impact on your statement of changes in equity, which is all the adjustments that speak about the partnership agreement. So you will recall that under adjustment number 8, there was salaries of 2,000 Rand per month that must be transferred to the partner's current account for a period of 6 months only. So Gabana is entitled to a salary of 12,000 Rand for the year. Remember, it was 2,000 Rand per month for a period of 6 months. and it will decrease the available profit by 12,000 rand. We go on to the calculation of interest on capital. Under number 7, interest on capital must be provided for at 10% per annum. So you take 10% on the opening capital balances. We transfer to the current account of Dolce, the one partner, the amount of 6,250, 10% of his capital. We transfer 7,500 rand to the current account of Gabbana. The available profit will decrease therefore with 13,750 because we transferred 6,250 and 7,500 to the partners' current accounts respectively. We work now with the next adjustment under number 7. Interest on the current account must be provided for at 10% per annum on the opening balances of the current accounts. Now, the opening balance of Dolce's account has shown a debit balance of 2,500 rand, which means that he owed the partnership money. His account was negative, and therefore he is not entitled. We can't transfer interest to his current account. However, it's like we must decrease his current account by 250 rand. The current account of Gabbana, who had a credit balance, which was a positive balance of 6,225 or 6,250 rand, the 10% on that will give you 625 rand interest on his current account. The impact of that, of course, on the appropriation is that your appropriation will have to decrease by the amount of 375. Okay? Many students struggle with this one, but just understand this one as follows. The 250 rand, the partnership, see that as the partnership is receiving 250 rand. The 625 rand, see that as the partnership is paying out 625. So the partnership is receiving 250, paying out 625, which means that we are in total actually paying out 375 rand. If you don't understand that part, always see it that there is a debit of 250, a credit of 625, which means that you must have a debit of 375. In your line, for the line item there, the debits must be equal to the credits. You will see it on top also. There's a credit of 12 and a debit of 12. Okay. We've taken into account now all the conditions of the partnership agreement. The last one under number 11 tells you that the profits will share, or the partners will share profits or losses equally. So what we do is we first calculate now the available profit. So the available profit, first calculate the available profit, it would be 66,830 minus 12 minus 13,750 minus the amount then of 375, and that will give you a share of the profit, the final share of the profit. The amount available to be divided amongst the partners is 40,705 rand. 40,705 rand, and that must be shared equally amongst the partners, and which means that each partner will get 20,352 rand. and 50 cents. So I'm just going to leave that as 20,352. The other one must also get 20,352, but we're going to make that one 3,353 just to round it off so that the total amount here is allocated. So the correct amount here is a 50 cents there and a 50 cents there, but I'm not going to show that. I'm just going to round it off like that. The drawings amount is not given to us, so we've got no drawings there. So the balances at the end of the year will just be 23,852, and for Gabbana, the closing amount there is 46,728. And that will conclude my statement of changes in equity. Anything that is not clear on that, guys? Statement of changes in equity. All good? Right, guys. Oh, yeah. I assume we need to add the decimals in an exam setting. No, it's not necessary. We round it off. Do it exactly as I've done it now. All right.
Perhaps just speaking of that, sir, I did notice in the study guide that it has a final column, which is the totals. Is that also not really necessary? Because it seems so superfluous, really, to do a total equity in the study guide, but it seems quite obvious.
Right. Okay. When we come down to exams, then they will normally tell you that the total column can be ignored. If, however, they don't tell you even that the total column can be ignored, you are not going to get marks for that. Just refer to I've given you from lecture number 1, the second one that you had to do for homework. That was the official memo from UNISA, and you will see that there's no marks allocated for the total. So you can leave that total column out. Okay.
Okay, I thought so. Thank you very much.
Okay. Anything else, guys? Right, guys. Just a few things just before we close off. Just remember, please, guys, complete the register and also complete your feedback. And then if you want to watch the same lecture again, of course, remember it is recorded, so you will get an opportunity to watch that again. And then also I will post the solution then again of today's lecture. I will then post again under session number 2, and then you can access then, of course, session number 3's notes, say from Tuesday or Wednesday onwards. I'm not sure whether we are going to have a class next week, because I know there's a clash, I think, with the facet class. So it could be that some of you guys want to attend the facet class, but that's not necessary. It all depends on you. So you will get notification as to when our next class is going to be. So you will get that via emails. Anything else? Lauren?
Hi, sir. Yes.
Yes, Lauren?
I have a question just regarding the facet classes. I've been a bit confused. What's the difference between these tutorials that we're having now and the facet classes? Are those completely independent of these tutorials, or how does it work?
Yes, it's completely independent. It's extra stuff for you. Okay.
Okay. Great. Thank you so much.
Right. All good. Anything else? If there's nothing, then guys, I want to thank you for attending this session. just complete the feedback session so that we can see where we're going and where we can still improve. And then I will see you guys next week or whenever you get that invitation again to the next session, and enjoy the rest of the afternoon then. Bye.
Thank you very much. Goodbye.
Okay.